So in the PRMS, the fundamental really piece of paper within PRMS for an investor who's not in the business in detail is this classification document. It has the range of uncertainty across the bottom, and then on the left-hand side you've got total petroleum initially in place. That could be gas or oil, doesn't matter. The lower one there, which is prospective resources, that's undiscovered. Your geologists, geophysicists will come up with ideas, as Ed will show, on where to drill a well. They'll come up with some volume estimates of what's down there if they succeed, but they don't know it's down there. There's always a chance of chance of discovery associated with that prospect, and it can be anywhere from 1 or 2% chance of discovery up to maybe 10 or 15%. You would not expect to see very many prospects for exploration wells above 15%. And as you go up the right-hand scale, you see an increasing chance of commerciality. So let's say you drill a prospective resource well and you get a discovery. Okay, you know it's down there. You know that there's hydrocarbons in it. You've probably produced some to surface. You've probably measured a flow rate. But you don't know the total volume down there. So you go into what we call as a contingent resource. You know it's there, but it doesn't satisfy the reserve criteria that I mentioned earlier. It's a contingent resource based on it might need more technical evaluation, which it probably does, more drilling. You probably have to, if it's gas, you have to get a contract in place. You may have to overcome your environmental hurdles, and you may have to get your company to approve the investment decision, FID, which means that you're showing to your company that it's economic to develop the resource, and you've got regulatory approval. In some countries, the regulatory approval itself can be a very, very time-consuming process of 1 or 2 years or more. In a contingent resource, you also have a chance of development, and that's linked to all the things I just mentioned, the economics, the licenses, the plan of development, the environmental hurdles. You've got to clear all of those. And depending on how many there are, that can take from 2 to 3 years, maybe even a few months, but it's usually several years. And once you've cleared all of those and you've got all the approvals, the government approvals, your corporate approvals, environmental issues are gone, you move up to reserves. And in reserves, there's still the range of uncertainty from 1P, which is your proved, your 2P, which is probable, and your 3B, which is, 2P is proved plus probable reserves, and 3P is proved plus probable plus possible reserves. And there's always the range of uncertainty in each category. And there's no guarantee that the 1P is going to be produced. It should be, probably 90% chance will be. There's no guarantee of that. You would not really expect it to exceed the 3P category. Then we have what was called the chance of commerciality. For every prospect, there's a chance of discovery with it. Is there a chance of the prospect producing volumes of hydrocarbon to surface? And that can be a small number, 5, 10% very easily. Then there's the chance of development that I spoke of, which is, can you convert the contingent resources to reserves? Prospective resources, that's the things that have not yet been discovered, have some risk, always less than 100% chance, usually closer to 5 or 10. Contingent resources always have some risk, but they can be much less risky because you know the product, the hydrocarbon is there. If you multiply the two together, you get the chance of commerciality of a prospect being converted to a commercial operation. And again, for high-risk exploration prospects, that's not a very big number.